Hello and welcome back to the AraFX Trading Challenge. Today is Tuesday, February 11th, and I just wanted to get you up to date with what's been going on here in the account. We've been sort of waiting here to show you some decent trading days and some good action, but one of the things that we're trying to do is to avoid some of the more sensational news events, because we know that there's a lot of volatility in the market, and that those are days when you can either make a lot or you can lose a lot, depending upon if you're on the right side of the market or not. But those aren't the typical day that you're going to see. It's not every day that a day like today occurs, when you have Fed speaker, Fed head Janet Yellen speaking, giving testimony to Congress, providing it early, giving us an idea of what's going on with U.S. monetary policy. So I'll just discuss that briefly, and then we'll talk about the trades that we took today, and what we're doing, where we're at, that kind of thing. So basically, we had Janet Yellen come out today, and there was really no surprise to what was going on. She's stuck with the we're going to keep the continuing taper as long as things look okay. The unemployment numbers aren't good enough, so that non-farm payroll that we talked about last Friday, while certainly a disappointment, excuse me, the unemployment rate ticking down, while that's a nice thing, and we're getting close to that 6.5%, they're going to reevaluate once we get there. So, at the end of the day, sure, we can get to 6.5%, but because there are so many people unemployed, underemployed, that have dropped out of the workforce, that's really a number that you can't even look at to use any sort of determination with how Fed policy is going. So, basically today they just said, okay, we're going to stay the course for now, and then we'll see what happens. So you can see here, most of the pairs that I'm looking at here are either yen crosses or they're just the dollar pairs. Stuff like cable, pound dollar there, or euro dollar. And I'll just show you here some trades that we took earlier today. But we'll start. I just want to show you first, before we get into it, just the kind of volatility we had. So you can see here we had some pretty big moves happen as we go back. You can see that right up here was right when the announcement came out, or right when they released the notes of Yellen. I guess that's a Freudian slip there, felon. No, I meant to say Yellen. That when her notes came out, what happened. So we saw that the dollar actually strengthened a bit. All right, sterling sold off, but then we got the bounce right back up and came back a little higher. Now we're coming off a little bit lower. I'll just show you the yen crosses, because they actually had a more pronounced move. Okay, you can see here that we actually had yen strengthened a bit here, and it was a pretty big move here. We went down from about on sterling yen here, up from about 82 all the way down to the figure here, 168, just a little bit below, before bouncing back, coming right back up and making a new high to 169. So these are some pretty big moves here. Okay, this is 100 pips right in here. This is just a little bit less than that, 90 pips, and the ATR for this is probably through the roof right now. So one of the things that we're trying to show you here is that, okay, it's great if you want to jump in on some momentum trades, and you see things are moving, and hop right on and take it for a ride, and you can certainly do that, but this isn't going to be your typical day, right? This is a day where you have extraordinary circumstances due to the Fed speaker, what have you, and you see it with other news events as well. So I just want to show you earlier some of the trades that we took, and we'll start off with where are we? We'll come over here and we'll look at cable. Okay, so cable is where we started the day off, and you can see right in here earlier this morning. Let me get rid of this auto scroll. All right, I'm just going to show you right here. You can see our trades here. By the way, today ended up being a losing day. We lost $6.66, and I'll explain a little bit more about how that worked. But basically, here are the trades today. You can see this is on February 11th. All right, we started off this morning, and we had an idea that we were going to see some dollar strength with this Yellen speech. And you can see that that's actually what happened initially. Okay, so we were expecting that the market was going to anticipate that and maybe push cable a little bit lower. So we came in here and we saw a good opportunity to sell. All right, it was just right about here at the 164, where did we come in? 29 level. So we came in just right on this little candle right here. We just saw this thing starting to go down. We thought we were going to get a break. All right, and we started off, took very small positions. All right, 5,000, just to kind of test the waters to see what was happening. All right, so we took 5,000 to 5,000. We got a little bit of bounce back up. but we said right up here, we thought 164.40 was a good area of resistance. Okay, you can see here we can draw just a straight line across there. Okay, and you can see that area right there, 40. All right, so we were kind of using that as our stop. All right, once we got back up, we were actually able to scale into the position, add a little bit more. So you can see here the trades, we started getting a little bit bigger. So we went up to, we added 40,000 there. So that put us for a total position of 50,000 right there. All right, and now we had an average price a little bit better, say 30 and a half there. All right, and then it moved up a little bit more. So we were able to put some more on. We did another 20,000 at 37.60. All right, and then we did another 30,000 at 36 back on the way down. So we're able to scale into a $100,000 position, which for a $10,000 account, that's a 10 to 1. That's employing leverage, but you know it's not max leverage by any stretch of the imagination. But when you get these ideas and you have sort of a slow-moving market, and you get in with a small stop or a tight resistance area, you know those are times when you may want to scale up. All right, so we actually had the trade move in our favor here. Came back down. It's moving along. All right, and we were able to get out here along the way. We closed positions at right around the 28. So the idea was that we had a trailing stop here. We were looking for the breakdown of the Bollinger Band to happen. You could see that it just started rolling over a little bit, and I thought we were going to get it. But when we didn't, when we bounced here, all right, it was time to cover the position and reevaluate. So that's what we did. And we made about, I don't know, 50, 60 bucks, something like that, which, you know, we left money on the table, but we also gave ourselves an opportunity to have a trade run in our favor. Not to mention that you know any positive trade is good because that gives us a little bit of money in the hopper that we can use for later, like what we did do later. So I actually jumped into sterling yen a little bit later. All right, show you this one here. And this trade that we took was a counter trend trade. Okay, and what we did with sterling yen was a little bit different, but you can see that the move happened here. We missed this move up right off of the reversal, right off of Yellen's testimony. But once it got up here, we saw a little bit of resistance here. We saw that we had this high earlier, okay, of 88.5. So we figured, okay, this was probably a pretty decent place to get short. So our idea was that we were going to get short. We sold at 75, and we wanted to get out right when we got up to about 85 area thereabouts. So we had the trade moving in our favor. We had about 10 pips. Looking for more. We were looking for a pullback to the 20-period moving average on the 5-minute chart, around the 50 area for that was about a 25-pip move on a 10-pip stop, so about 2.5 to 1 reward to risk, but we didn't get it. Okay, you can see here that it looks like 60's held pretty good. All right, and then we got this bounce higher. We got out, and as you can see, the trade moved higher until we broke the figure. So at that point, we lost 62 bucks, which put us down $6 for the day. And at that point, a little bit later in the afternoon, we said, okay, maybe enough is enough right here. We don't want to just try and keep shorting this thing. It's on a pretty good uptrend here. Now, of course, looking at this chart right here, just below the figure at 169, you can see that this is probably a pretty good short area. But honestly, I wouldn't have taken this trade again and didn't take this trade again unless our last trade was a successful trade as one. Because what we want to do with this is as we're taking trades throughout the day, we want to be able to pyramid a little bit. And what that means is adding size, adding a position when things are going your way and moving in your favor. So, you know, a lot of people will do the opposite. When they take a loss, they'll now double down their size on the next time, hoping to recoup that loss, okay, and then make some more back initially. Well, that's a surefire way to blow up your account. So we actually do it the other way. When we have winning trades, we try and pyramid it a little bit. But by the same token, we don't want to you know, we don't want to just get rid of and lose all of our gains for the day. But it's a lot easier when you do have a little bit of money on your side to be able to do that. So that's what we did today. But what we've really noticed about today's trading action is that the ranges were expanding. Okay, you can look at here on the 30-minute chart. Okay, you can see we're still in a bit of an uptrend here. All right, but we're looking a little bit toppy up at this 169 area for sterling yen. Okay, and we can look at some of the other pairs and say the same thing. 136.50. All right, we could be on the next move higher, depending upon how data comes in. But it's going to be smaller data, not as big market moving, and we'll have to keep an eye on it. So we're looking to play these ranges. We're looking to keep it tight. And again, we're on our way to this 20% gain in 20 trading days. So essentially, that works out to about $100 a day. And we're just trying to show you that it can be done, and it can be done in a live account. And if you want to learn how to do this, is. Okay, if you want to learn the techniques that AraFX teaches, by all means get in contact with us. Okay, you can follow this channel here. Keep an eye on the trading, what we're doing. Get in touch with us, figure out how you can get the ebook, how you can get access to the other education. Maybe you want to open an account, get started yourself. There's no need to pay for education on other websites. All right, you're better off putting that money in your account, trading it yourself with some like-minded folks. So that's what we've got for today. Tune in next time to see how we did on our goal to make 20% or more per month. For AraFX, have a good day.